Hey everyone, it's Dale Anderson from Fabrik Invest. I hope you're keeping well. I just wanted to update you today on the UK property market. A lot of people are asking me, do I think it's good to wait now? Are prices going to crash? Are prices already falling? So just wanted to update you. According to the latest reports by the Royal Institute of Chartered Surveyors, property prices in certain parts of the country have already started to slow down pace and starting to fall like they did back in the recession of 2008. This has been made worse by home builders reporting a steep drop in sales, a sharp jump in cancellations, and challenging short-term conditions. So has the UK property bubble burst? Again, my name is Dale Anderson. Please click subscribe to my channel for more insights if you find this useful. We want to guide you and help you to make the right decision if you are considering investing in property. So let's get started. For the last 10 plus years, new build developers have been living the sort of dream, skyrocketing profits, increasing share prices, executive salaries and bonuses going up faster than food prices. All of this despite terrible track records of workmanship and also embarrassing customer service, to say the least. So it doesn't take a rocket science to figure out why home builders have been so successful over the years. A conservative flagship Help to Buy scheme introduced by George Osborne put a rocket on house prices combined with cheap lending. So I always knew this Help to Buy scheme was going to run into trouble. Prices went insane at high elevated levels but continued to increase. However, it appears that the house of cards have started to collapse. There's been a damning report by the Housing of Lords who found that the scheme's 30 billion support had been wasted. The main effect was to increase prices by more than their value. The report argues that money would have been better spent on increasing housing supply. Taylor Wimpey have reported that their cancellation rate has jumped in the second half of the year, increasing from 14% to as much as 25%. Sales rates have almost halved from 0.91 in 2021 to 0.51 homes per outlook a week in the second half of this year. And the Royal Institute of Chartered Surveyors have reported the latest monthly survey, house prices have started plunging in East Anglia and the South East, with sales plummeting at fast rates as they did in the financial crisis in certain parts of the country. So this drop marks the end of a truly remarkable run, 28 positive monthly readings. When trying to figure out what is going on in the housing market and where prices are going, there is a blizzard of information and data to go through, much of which contradicts itself. So it's very difficult to determine how the market's going to react, making it almost impossible to say really where we are heading. Plenty of reasons to, unfortunately, to expect a slowdown and potential downturn. There's a looming recession, rising interest rates, the end of the Help to Buy, and a long and extended boom and cost of living crisis. So multiple factors to consider there. So this has had a direct impact on the property market and the economy as a whole. It also impacts people's perceptions of the property market. What people perceive does have a massive impact on the overall sentiment to the market. For example, recently reported by the Building Society Association, a number of people think it's not a great time to buy property, and demand has fallen to its lowest level since 2008. We also had the autumn budget statement, which has impacted spending. The main goal was to address the 50 billion black hole in the country's finances without rattling financial markets. Jeremy Hunt has announced key tax changes, halving the capital gains tax annual exemption from £12,000 to £12,300 to £6,000 in 2023 and 2024, and again to £3,000 in 2024 and 2025. Furthermore, dividends allowance will be cut from £2,000 to £1,000 next year, and then £500 from April 2024. So what does this mean? By 2025, anyone receiving dividends above this amount, likely landlords who have incorporated a company, will pay tax on them at a rate depending how much that other income they receive, basically. So local authorities also, they can raise council tax by 5% without holding a referendum. That is 3% plus an additional 2% if they have social care responsibilities. This is likely to be another pressure on private tenants. It means, in Band D, council tax could rise from an average of £1,966 to as much as £2,064. Stamp duty cuts announced in September will be time limited, ending March 31st, 2025. Hunt says this is to help the jobs and firms that rely on the housing market through current challenges, while strengthening the public finances in the long term. Earlier this autumn, former Chancellor Kwasi Kwarteng increased the threshold at which stamp duty is charged on residential purchases from £125,000 to £250, with the threshold for first-time buyers also up from £300,000 to £424,000. And this would be to used on purchases worth over £625,000. So this hasn't helped. Again, inheritance tax thresholds have been frozen for an extra 2 years, making hundreds of thousands of homeowners now liable for inheritance tax. Thresholds. The threshold for when the highest earners start paying the top rate of tax will be brought down from £150,000 to £125,000. Those earning £150,000 or more will pay just over £1,200 more a year, he says. So, what does this mean for investors? The changes have not been very supportive for landlords. Changes to rules around mortgage interest relief, higher stamp duty rates, which can make things worse really if landlords react and decide to sell quickly within a limited time period or window. So property disposal may accelerate, put downward pressure on property prices. As with most things, there is a political balance to be struck. Rising rents and falling prices are not things government want to focus on before their next election. I'm personally a big believer, looking into past performance, to understand the future, not to assume what happened before will happen again, but something is to be said to be looking at potential trends and common themes and comparing them to the potential outcome of the future, just to make sure we are prepared. So back in 2008, house prices tumbled across the country as a result of the financial crisis. Average prices fell 20% over the course of the next 16 months. Transaction levels fell from 1.65 million just to 730,000 in year to June 2009. The recovery was slow. It took about 5 or 6 years to reach pre-crash levels in some areas. We may not be heading for a financial crisis, but we are certainly heading towards a looming recession, in my opinion. So a few people, I get asked common questions on my videos, and a few things people have been asking recently: what is happening in the housing market? The property market seems uncertain right now. Buyers needing mortgages are halting due to higher repayments and increasing costs of living. Those with mortgages which are expiring or due to remortgage, they have one of three options: move ahead with the high interest rates, move on to interest only, or choose a tracker mortgage. All three come with their own risks, of course. Number two, should I buy a house right now? Whilst we can't give you financial advice, and we do recommend you speak to a financial advisor because it depends on your specific circumstances, what we can say is, based on a recent survey by the Building Housing Association, it does reveal a number of people think it's a good time to buy has fallen since 2008. Historically, those who take the plunge when people are nervous can be a great time to find good deals and invest. So it could well be a good time to invest if you want to get a good deal. My opinion is buying is for long term. If you can afford to, go for it. Number three, should I buy a new build, and will they hold their value? Average home builders, they build as many as they can. Some are great, some are better than others in terms of specifications, so you just need to make sure you do your due diligence. But what you also need to watch out for is, because build inflation and costs have gone up so much, you need to check on the new builds. They can sometimes be more expensive due to inflation costs. You want to check your market comparables, make sure that there are other properties in the area and they are selling for the correct value. So again, educate, do your research, speak to a property expert who knows what they're doing. I really hope you found this useful. Remember to subscribe to my channel for more information and news. Thanks. I'll keep you updated on the next one. All the best.